A $6 billion takeover deal from Malaysia's Petronas scuppered. A $15 billion deal from China's CNOOC under a lengthy review. Is Canada having second thoughts about some kinds of foreign direct investment? Joining us now in the nation's capital with more on that, Brian Lee Crowley. He is Managing Director of the Macdonald Laurier Institute. And Brian, it's good to have you on TVO again. How are you doing tonight?
I'm just grand, thanks, Steve. Thanks for having me.
Beautiful shot of Parliament Hill behind you, incidentally. I just thought I'd let you know. Let's start with a little background here. Petronas, the Malaysian state-owned energy company, made a bid to take over Progress Energy. That's a Calgary-based company, and of course the Conservative government has now formally rejected that proposal, saying it wasn't satisfied that the deal was in Canada's best interests. What was the government's explanation for why it turned thumbs down?
Well, I wish I could say there was an explanation, Steve, but really they've been very cagey, and understandably so. You know, there are confidential business considerations here, which they are very careful not to reveal. A lot of information is given to them in the course of these reviews of investments, but basically they simply said, look, it doesn't meet our test of net benefit to Canada. I think we have to say, however, that the word around Ottawa is that what actually happened was that Ottawa asked for the consent of the parties to extend the review process, and they expected that that would be forthcoming, and one of the parties, we don't know which one, refused to give that consent, and so Ottawa simply had to say, okay, then no deal, but you get 30 days to come back and convince us that we should approve this deal. And in fact, the parties have indicated that they are going to meet with Ottawa. So I don't think it's quite correct to say that this deal is off the table. They are trying to rescue it as we speak.
Okay, not dead yet, but the two words that we hear thrown around Ottawa a great deal these days are net benefit. Does everybody have the same understanding of what that expression net benefit means?
Absolutely not. In fact, you know, net benefit is, I think, intentionally vague as a term. It's a term of art. You know, what the government wants is to be able to look at all the considerations that go into a proposed deal and try and arrive at an understanding of whether overall it's going to be of benefit to Canada. But that's there is no scientific or even legal definition of exactly what that means. It gives the government a lot of scope to consider many factors.
Well, that's the thing I wanted to really understand. So there is no law anywhere in which you have Section 1, Subsection 1, letter A, detailing all of what net benefit means. That's just left purposefully vague?
Yes, and in fact, this is one of the criticisms that's made of the regime, is that many people in the investment community say, well, this is a black box. Nobody knows what we're being asked to prove, and nobody knows going into the deal whether you know, you're going to be approved or not, and that introduces an element of risk and uncertainty, and everybody knows the business community just hates uncertainty. Opportunities are perishable. They want to know, if they're going to put a lot of time and effort into you know, negotiating a deal, that there's a reasonable prospect of approval at the end. And something so ill-defined as, will the government of Canada agree that there's a net benefit when we don't know exactly what that test is, well, that causes the business community some heartburn.
Okay, if not an actual law, is there an understanding of what the conditions or values of the government of Canada, and I guess through them the people of Canada, understand that expression to mean and to entail?
Well, let's talk about some of the things that federal governments have asked for in the past, or, you know, that have been on the table with some of the current bids that are under consideration. Often they want to look at things like, what would be the impact on employment in Canada? If, for example, you have a company in Canada that employs thousands of people, and there's a company in another country that is proposing to take them over, fire all the Canadians and move all the work to their home country, that's unlikely to meet the net benefit test. They're going to ask, well, who's in control of the company that you're buying? Again, if it's a Canadian company with a Canadian board of directors listed on, say, the Canadian Stock Exchange, will those things remain in place, even though there might be a foreign owner? Will it still be a Canadian board, or a board dominated by Canadians? Will it still be listed on the stock exchange? How transparent is the relationship between the new owner and the Canadian company? These are all factors that will be weighed up.
Okay, that helps us. How about something else into the mix here? What if the head of the company, the board of directors of the company, and if you have some way of understanding that the shareholders are in fact in favor of this takeover, does the government take all of that into account in making its decision?
Oh, I'm sure it does. I mean, let's talk about the CNOOC bid, the Canadian, sorry, the Chinese National Overseas Oil Corporation's bid for Nexen, a Calgary company. One of the reasons that the oil patch has been very keen to see this deal approved is because CNOOC has made a bid well in excess of the market value of the company. By some estimates, it's about a 2/3 premium over the market value in the stock exchange. And the people who hold, and many of them are Canadian, the people who hold Nexen shares are quite anxious to get their hands on that premium. That's a lot of money coming into Canada, and I'm sure that that would weigh in the net benefit calculation.
And while we're on it, what's your understanding of where that whole bid is at right now?
Well, if you think about the way the law operates, the Foreign Investment Act, what happens is when a bid like this, bid to take control of a Canadian company, is formally announced or the federal government is formally notified, there's an initial period of 45 days during which the government gets to examine the bid and get information from the parties and so on to try and reach their conclusions about net benefit. They are entitled unilaterally, the federal government, to extend that for another 30 days, so that's 75 days. And then they are required to make a decision unless they can get the agreement of the parties to extend it for further review. That's exactly where the Petronas Progress bid came a cropper, was at that 75-day limit when Ottawa said, can we have some more time? And one of the parties, I think, said no. Where we are with CNOOC and Nexen is we have passed the 45 days, and we are into the next 30 days, but they're a bit cagey about exactly when these dates occur because they consider that that's part of the confidentiality that is owed to the parties to the transaction. So I have asked myself directly to the people in charge, what are the dates we're talking about here? And they won't tell us.
Okay, but admittedly, we're kind of reading tea leaves here, but let's see what we can infer just from what's transpired so far. I think there are many people in Canada, maybe some of them in the Conservative government, who find the Malaysian bid much less problematic than the Chinese bid. It's much smaller in terms of dollar value than the Chinese bid, and yet the Malaysian bid was turned down. So the logical conclusion you'd come to is, well, if they turn down the Malaysian one, then surely to goodness they're going to turn down the Chinese one too. Is that a fair, logical conclusion to come to?
It is, Steve, if we remember, though, what I said a moment ago, which is that my sense of it is that the Canadian government did not set out to scupper the Progress bid. What they asked for was more time, and when they weren't granted more time, their reaction was, well, if you won't give us the time to do it properly, then the answer is no. And I think that's made the Progress and Petronas people rush back to Ottawa asking for, I think there was a little bit of a game of chicken going on here.
Gotcha.
So I think it's a mistake to read too much into it, but I will say that I don't think Ottawa was unhappy at the signaling that it allowed them to give on, in terms of, if you like, informal guidance on the Nexen transaction, because I think there is misgivings in Ottawa about that transaction, but they don't want to be put in a position where they can be accused of singling out China in terms of their misgivings about foreign investment, particularly in Canadian natural resources. So it's given them a chance to say, in effect, well, we're being pretty strict with Malaysia. They're not getting a free pass. So whatever we do with CNOOC is going to be subjected to a similar standard. And by the way, I agree with your analysis that Ottawa has far fewer reservations about Malaysia and the Progress transaction than they do about CNOOC and Nexen.
Okay, so let's go up to sort of 30,000 feet here and take a higher look at all of what we've been talking about. You have, on the one hand, all of what we've referred to here, the problems with the Malaysian bid, with the Chinese bid, and yet you've got the Prime Minister in Beijing and other Asian capitals very recently, trying to attract foreign investment, saying we're open for business. Are we sending a mixed message here as a country?
Well, perhaps. I think one can make a case for that. Let me put the opposite case, Stephen, which is that, if you say you're open for business and you're looking for investment, I still think it's perfectly okay for you to say, and by the way, I care about where the money comes from. I'm perfectly happy to take money from a chartered bank, which is a transparent, open, public institution. I'm perfectly happy to raise it on the stock market. I'm not prepared to take it from the mafia. Where the money comes from matters. And so I think that if Canada goes to Asia and says, we're open for business, we're looking for investment, it's perfectly legitimate for them to say, and you know what, if that investment comes from, let's think about some giant Indian corporations, Tata, for example, or giant Korean corporations like Gold Star, or Japanese corporations like Mitsubishi. These are public corporations, they're listed, they're subject to all sorts of controls, transparency, accountability, audits, you name it. We know who owns them, we know how they behave. All these things are important to know if you're going to take money from somebody in a business transaction. And one of the hesitations I think that we have, and I think it's a legitimate one, is to say, well, do we really know who we're taking money from when it's a state-owned corporation in China, to take that example, when we know that these corporations are in fact not independent entities. They are, if you like to think of it this way, their parent company is the Chinese state. Mm-hmm. We need to know, if we take investment from them, are they going to act as a private company would, or are they going to act as an agent of the Chinese state? Those are completely different propositions, and we don't have a clear answer.
Well, having said that, some of those countries you just listed, China, Japan, and India, I don't know if you read the comments of our former ambassador, actually, to all of those countries, who was in the National Post just the other day, writing the following: decisions, especially negative ones, surrounding bids such as those for Petronas and CNOOC, take on more weight and gravitas than they deserve. They can shape foreign investment expectations for the longer term and well beyond the resources sector. Negative decisions will be seen in some quarters as a blanket rejection of foreign direct investment, making it more difficult for Canadians and their government to claim that Canada is indeed open for business. Is he right?
Well, I think there's something to that. I agree that some people will take it as a blanket rejection. On the other hand, I mean, let's look at the oil patch, or indeed the natural resources industry in Canada. You can hardly make the case that there aren't foreign investors in Canadian natural resources. In fact, many of the largest companies in Calgary, in the oil patch, or in the oil sands, are in fact very large foreign-owned corporations. The majors, Statoil, which is a Norwegian oil company, is very active in the oil sands.
And that's government-owned.
And that's government-owned.
Yeah.
So we can't control the misinterpretations that other people may put on our actions. I think what's important is that we are clear about what we're doing and why. And if we think that we have good reason for making certain decisions about particular state-owned corporations, or indeed particular states that own state-owned corporations, I think we're entirely entitled to do that. If some people want to misinterpret that as a blanket rejection, I've got to say, I think that's their problem, not ours. Our responsibility is to do the right thing for Canada.
So if I'm hearing you properly here, being a state-owned business isn't necessarily the problem, because as you point out, a Norwegian state-owned business is operating in Alberta, but it really does depend what state, right?
Yes, I think that is absolutely correct. I've got to tell you that I'd lose no sleep over Norway, which is a NATO ally and a transparent, democratic country with the rule of law, and investing in the oil patch. I have no conceivable objection to that. On the other hand, we have lots of evidence, for example, that Chinese state-owned oil corporations are involved in sanctions busting against Iran, that are involved in the proliferation of chemical weapons, that China is involved in active efforts of espionage, both corporate and political, against Canadian companies and governments. I mean, these are just not comparable organizations. They're not comparable states. Their relationship to Canada is not the same, and I think that matters.
Okay. Let's, as Bob Woodward once said, follow the money. Canada, of course, has a relatively small capital investment market, and if we're going to develop the oil sands in the way that some people in this country think we need to develop the oil sands, we're going to need more foreign direct investment. I think I saw an estimate in the Washington Post the other day that said we need north of $200 billion to invest in those oil sands if we want to do what some people want to do, and obviously we haven't necessarily got that much money here. So the question becomes, are the government's actions putting that investment in jeopardy?
Well, Steve, my view would be that you know, the reason that the oil sands were recently evaluated at a value of about $3 trillion is because the world needs the energy that's locked in the oil sands. And that's just one example. I mean, there's also the Bakken oil shale formation, there's natural gas and conventional oil, and all of these things we have in abundance in Canada. They all require capital investment. And so the point is correct that we need that investment. We can't generate it entirely domestically. We need foreign sources of capital. That being said, the reason that foreign capital would come in and invest there is because they want to extract that those energy resources to get them to market. Frankly, my view would be that as long as there is a good prospect of making real money in Canadian natural resources, which there is, and given the fact that the world is awash in capital, which it is, I think we don't need to point out or identify specific sources of that capital and say, oh, if we don't get that one, we're out of the game. I just think that that is a complete misrepresentation of the state of play for energy in the world. We have completely predictable sources of demand for our energy resources. We can see from the International Energy Agency demand for oil and gas continuing to climb for decades yet to come. Canada is one of the most reliable sources, one of the most reliable places to invest, to produce those resources. I'm completely unconvinced by the argument that if we don't take the money from sources that we have misgivings about, that we won't find it somewhere else. I can't accept that.
Okay, but having said that, every decision comes with consequences. And in our last minute here,
Yes.
Brian, perhaps you could speculate as to if we do turn down the CNOOC deal from China, it's unlikely we're going to get away with that scot-free. Will that damage our either trade relationships or diplomatic relationships with China? What do you think?
I think that it will have consequences with China, but you know, this is one of the reasons why I think we're right to be skeptical about China. We all know that China doesn't hesitate to throw its weight around with people that they think are vulnerable. And one of the reasons people are concerned about this decision is they are afraid of what China will do in response. I think being afraid of one of your trade partners, being afraid of one of your investors, is a danger signal that we need to think about carefully. I think we need to ask ourselves the question, what would be the consequence of accepting the deal? What would we be living with? What would we be walking away from? And which is the better calculation of Canada's interest? I think it's a pretty finely balanced thing right now. I'm not saying we should reject it, but it's not obvious to me that we should approve it either.
Understood. Brian Lee Crowley, it's awfully good of you to join us from the Macdonald-Laurier Institute in the nation's capital. Thanks for being on TVO tonight.
It's been a pleasure, Steve.
Support Ontario's public television. Donate at tvo.org.